Welcome everyone, another great video. We have lots of fantastic questions. This one came in from Roger. I accidentally over contributed to my RRSP. Oh no, you put too much money in. That actually happens more often than you might think.
Yep.
How do you fix it? That's what we're going to tackle right now. Let's get
Yeah.
into it.
So, I mean, basically, if you've over contributed, it depends on how much you've over contributed. That's the first thing to know. If it's $2,000 or less, theoretically, you don't have to worry about anything. The government allows you a $2,000 buffer. So you don't get a deduction for any of that money that's over up to the 2,000. But by the same token, there's no penalty for leaving it in there. So if you've over contributed by more than 2,000, though, that's when you start to get penalized. And it's penalized at 1% a month. So, I mean, basically, we look at an example we've got here. Your RSP limit's 10,000. You put 13,000 in. Well, 10,000 is the proper RSP contribution rule. You get to utilize that. 2,000 is your buffer, no deduction, but you don't have to take it out. That extra 1,000, though, if something doesn't happen to it, now you're penalized on that 1% a month, every month, or $10. So the penalty applies on over contributions is addressed that way, but there's ways to fix this.
Yeah, so until you fix it, you're paying that penalty, effectively what it is. And this is common because often folks maybe have multiple RSP contributions, they change jobs, they weren't too sure what the new job's RSP plan looked like, and you end up putting in more than you thought. That does happen. And what you just mentioned would apply that buffer plus the penalty for the excess. How do you actually fix it? One way is you just pull it out. So you put the money in, you take it out. However, when you take it out, whatever firm you did the RSP through, they're going to ding you withholding tax. They don't want to ding you withholding tax, but the government makes them do that. So that you to put 10,000 over contribution, you want to withdraw 10,000. They're going to say, well, withholding tax on that 10,000 is going to be 20%. So we got to take $2,000 away. You can then fill in Form T746. When you file your tax return, it all gets washed away and you would get that money back, or at least we get a deduction to offset the income plus the withholding tax. So it does wash out in the end, but you do have to pay it up front if you go with this method. But there's more than one way to fix it. So let's look at option two.
Option two is you can just wait. Depending on when you've done this, there's an option to just wait until the next year when assuming you're getting more RSP contribution room, and you can obviously put it towards that. So, I mean, if you contributed early in the new year, you may want to get it out, but if you're contributing later in the year, say in the November, October sort of scenario, you may just want to leave it and see if it goes from there. The room's going to be absorbed by the overcontribution. Now, your penalties will still apply at this point, but that's something to take a look at. So again, if you contributed that your room is 10,000. You put that 13,000 in. As we mentioned, 10 is the proper amount. 2,000 is the over contribution. 1,000 is there. Now, if this was done in October of the, say, last year, you could wait until January of this year. At which point, if you get another 10,000 based on the summary you got last year, well, you've already got 3,000 over contribution room total that can be contributed to that going forward. You'd only need 7 to get to your 10, but it would absorb it. But in the interim, October, November, December, you'd be taxed that 10% based on that 1% that you have to take each month on the over contribution.
Yeah, and this might be an easy option instead of chasing forms. It really depends when you do the contributions. Lots of folks do them in January, February. That's a very common time. But let's say you did it later in the year. This might apply. It also key is it assumes you have additional contribution room. You're still earning contribution rooms. This applies more to people that are still working, less so to retirees, because retirees often don't earn extra contribution room, but it is an option. We'll go through option 3 here in just a second, but Roger had a great question that led us to this video. If you have a question, how do they get a hold of us?
Chat with ClintonandKevin.com. By all means, send off any of your questions on RSP over contributions if you have them, or any other financial matters. We'd be more than happy to take a look at them and answer them as quickly as we can. They do come directly to Clinton and myself. We're the ones getting it to you. No robo-advisors. Nobody else is setting it to it. So you'll get the answers as quickly as we can get them out to you. Besides that,
we do have a newsletter. You can sign up for it. There's a link, I believe, in the description. Click that, and you can sign up for the newsletters. If you like these videos, or certainly like the newsletter, because it's additional financial planning tips. Comes out each and every week. We talked about over contributions, went through 2 options. Look at option 3, and I'd say this is probably one of the most common, especially for retirees. It is simply filling in Form T3012A.
Yeah, and when you fill out that form, basically what you're doing is you're sending it off and telling the government, look, I made an overcontribution. I want to get that money out. I just don't want to pay the taxes on it. So it's not an urgency, probably. You're not sitting there and saying, well, I need it out tomorrow. You send it off. The government sends the approval. When you get the approval, you take it to your financial institution where you did your contribution, and they can take the money out of there without taking withholding tax off, and they can get it back to you. So that's a big one. Withdrawal still comes out on your return, but you can also claim an offsetting deduction that goes on just based on all the forms that have gone around through the government.
Yeah, that's probably the most common. If it's a really big number, you might, a large over contribution is what I mean. You probably don't want to do this option, because you have to fill in the form, you got to send to the government. There's some time lapse there, and you don't want to have a penalty that potentially is accruing. If it's a smaller number, well, this probably makes the most sense. Is you fill in the form, CRA
Yep.
gives you the approval, your financial firm then takes it out, no withholding tax, and then you can simply reinvest the money somewhere else or spend it, whatever you want to do.
However that works.
Your funds. So we went over how you can deal with an over contribution on an RSP. Well, how do you normally get money out of an RSP? Well, that's what this video right here is going to tell you all about. RSP Meltdown Explained. Click on that one. We'll see you again very soon.
Take care.